love with you, I just can't help it myself. I'm in love.
Hello, guys. Hello. Good morning. How's everybody doing? Somebody give me a sound check. Let me know if you guys hear me okay. If the visuals are good, so on and so forth. Let me know, please. I got to do a couple of things here. I want to... Okay, take this off. Good morning. Somebody give me a sound check. Let me know if you guys hear me okay. If everything is good. Trying to see if I'm on live here. Okay. Okay. Awesome. All right, I don't know why I'm not getting this flow. Okay. Cool. Good morning, everybody. Good morning, Patrick, Bobby, LJ. Good morning. Hey. Good to have you guys with us. We're going to build up to a really nice session today. Can I share stuff in here? You know what? Let me try something. Hang on a second, guys. Hang tight. I'm going to close this up. I'm going to try. I want to... All right, cool. Let me see if this works. Okay, it should work. So I want to do a quick review. I have the PDF of this presentation, and there are a lot of you guys who are in my room who've asked for it. It's in our Discord. I'm not going to give it to anybody who's not a member of our Discord, just because I don't have the patience to have to, email you back. You want this? Come join us. Let me give you a discount link. It's a super cheap offer. You can just come join us for a month, and I'm happy to do this for you. Alternatively, I will do this for you if you get an Apex account on a discount. I'll do that for you as well. Just email me, tell me you bought an Apex account, and I will send you the PDF as far as trading goes. But if you want the rules to my trading, they're all in PDF. I made them for you. I'll go through them with you right now so that everybody can kind of look at the stuff and enjoy it and understand why and how we make money virtually every single day. So I will do a more formal presentation of this sometime, maybe like on Thursday, but I kind of just want to give you a quick preview of the basic ideas of why I like to scalp before we start trading. So number one reason for trading, for scalping, in my opinion, is just simply precision. What I mean by that is scalping is perhaps the most precise forecasting tool there is. And the perfect analogy for this that I can give you is the weather. If I told you, could you predict the weather 1 minute forward, you probably have about a 90% confidence, maybe even 95% confidence in your prediction. If I said to you 1 hour forward, maybe be about 80% confidence. If you were in Florida, maybe about a 50% confidence. 1 day forward, that confidence level drops to 50%, and then 1 month forward, maybe 20%, maybe even 10%. So it's a sort of a same type of situation in terms of watching prices. It's much, I can't say it's much easier, but it's certainly much more confident to predict price levels on a very short-term basis than on a longer-term basis, simply because you know you have many more variables to contend with the longer the time frame that you have to go, and therefore it's very hard to predict the envelope. The second reason why scalping is so interesting, in my opinion, is just simply risk control. You know, on any given trade that I'm doing right now on a $250,000 account, I'm not risking more than $100, $200 per trade. Now, you know, yes, when I get larger, I risk maybe $1,000 per trade, but that's still a pittance of the notional value that I have. And it just gives you an idea of the kind of risk control that you can impose when you are trading scalping. This is a very interesting quote from Mark Weinstein, who's one of the best market wizards and kind of, I think, almost a mentor of mine in terms of the temperament and the approach that he does, because he's very much a scalper. He's a very much short-term trader. Now, this guy's did this like 20 years ago, so he was really a revolutionary at that point. But he basically talks about the idea that, you know, when he trades at home, I often watch the sparrows in my garden. When you feed them bread, they take just a little piece at a time and fly away. They keep on flying back and forth, taking small bits of bread. They may have to make 100 stabs at a piece of bread. I may have to make 100 stabs at $1,000 day. Okay, but to get what a pigeon gets at one time. But that is why a pigeon is a pigeon. You will never be able to shoot a sparrow. It's just too fast. Generally, you will never be able to kill me with a margin call because I am just too fast to get out of the trade. It's a sort of the same idea, same concept. I think it's just kind of the way that I trade. And then finally, and this is really the most valuable and interesting reason for why you can scalp, is the ability to generate money through frequency. We talked about this in coaching yesterday, and I'll kind of explain this in more detail. But frequency is nothing more than just simply the idea of using the same amount of money many times over versus using one piece of money and borrowing a lot against it to achieve it. So typical leverage on a 10-to-1 trade is you have $1, you borrow 10, right? That's what everybody does. You know, when we're trading like typically large amounts of money, what I mean by that is, like, you know, somebody takes, 10 lot position, 20 lot position. They're borrowing huge amounts of money effectively against that position, and a tiny little move against them, of course, can flip them over. What you see being done on the web, for the most part, is people taking very large positions and leveraging their whole accounts into one or two trades. We do the exact opposite. We take tiny positions, but we flip them over 10 times. So you can achieve leverage either by borrowing 10-to-1, or you can take the same amount of money and flip it over 10 times, and you've gotten the same criteria. It's kind of the example of that in retail is the Zara retail chain, which is called fast fashion. They basically revolutionized all of retail by doing the following. In the old days, like Macy's would take $1 million worth of loans, buy all this inventory, hold the inventory on the floor, and then wait for the inventory to come out the door, then go borrow again and do the same thing over again. Zara said, hell no, we're going to take $10,000, buy inventory, flip that inventory over in 2 weeks, buy fresh inventory with that $10,000, buy fresh inventory with that $10,000. So by the time Macy's has flipped over its inventory once, we've flipped over our inventory 10 times, and we've achieved the exact same sales with far, far less risk. So that's sort of like the really, really big aspect of it. So then the other part of my presentation is just to show you the basic ideas of the scalper. And again, as I said to you, happy to give this to you if you're a member. Happy to give this to you if you get an Apex prop account. But don't ask me for this PDF. Otherwise, it's going to sit in our Discord. Just come join us. I put the link in there. Come join us, and you'll get the rules nice and easy, so you can use them as a reference source. So the BFF Scalper, which is a proprietary tool that we use all day long, has basically 3 rules to trade with trend. This is a momentum rule. This is for those people who trade momentum, which is not what I do. I trade retraces, but this works the exact same way. So we're looking for 3 conditional rules. The first conditional rule is actually max width in the moving average has to be less than 30 bips. Really, really important rule. So if the moving averages are compressed, you're good to go. That's what you want. That's number 1. The second, obviously, is that the 8 SMA is above the 200 SMA. You got to be in an uptrend to have an uptrend. You got to be in a downtrend to have a downtrend. And then the third, very, very simple. You need to have an H, means a higher high on the label. If you have a higher high on the label, you buy this thing, break out, boom, you make your 10 points, so on and so forth, right? Same idea on the sell side. Width's got to be compressed. SMA's got to be below the 200 SMA. And now you're just looking for L's, and you're going to sell the L, sell the L, sell the L, right? So that's the momentum one. The retrace one, which is what I trade, is the purple arrows. And the purple arrows is where I effectively buy the dip. So in this particular case, this 2H, I'm buying the dip. I'm buying this trade instead of taking the breakout. I'm buying the dip, and I come in on the trade and make my money over and over again. So again, I still need to have an H for trend trades. I still need to have max width lower, and I still need to have the 8 SMA above it. Same thing to the downside. And then downside, obviously, I need to have the L. I'm going to sell. I'm going to sell the highs over here, and take the trade back the other way. So that is the basic rules of what we're doing, which allows you to kind of see where we're at right now, which is let me see if I can do this. Okay, here we go. So this is S&P, right? Let's take a look at the S&P just kind of from this perspective and understand exactly what it's doing. Market opening up in about 7 minutes, so we're not going to trade before the market open. I'm actually going to be good and not generate trades like a maniac before the open. Looking at an analytic infrastructure, what's obvious here? The moving average is only 3.7 basis wide, very, very tight. Moving averages are all compressed. Volatility is low, no problem. The blue is above the red. We're in an uptrend, right? Do we have the H's? Yes, we do. We're not going to take this trade because it's pre-market open. But we could have taken this trade. It did not work in this case. This is the reason why we don't take them before the market open, because it may be changing regimes and going down. But that's neither here nor there. It's just simply the point of this would be a classic trigger for us. We have all the lights in our direction, obviously with the exception of the fact that we don't have the proper time on the open, right? Same thing over here. Now, here's what's interesting sorry, let me just get this. Whoa. This thing is, I think it's just I wonder if I can get rid of this. Can I get rid of this bar? Open, high, low. Is it in the properties? If we go into settings, would it be symbol? Symbol. Let me see. Data modification, default, electronic settings, status line. I'm trying to figure out if I can change. Do I change values? No. Status line, scales and lines. Name value line. No. Up. High, low hidden, bid ask hidden. All right, I don't know how to get rid of this, so I'm not going to worry about it. All right. Anyways, so we see the max width on this is very, very tight. But here's an interesting thing that I kind of wanted to show you. Good morning, Enzo. How are you, my friend? So this is something that we talked about in coaching yesterday. The easiest money for us is when we have a longitudinal trend. In this case, Nasdaq has essentially been in a trend for about like 3-4 hours, right? The blue's been above the green. And here's how you can think about time equals money. If you traded this whole long trend, which I did not because I was busy with other stuff. Let's say you buy this, you get stopped out, you buy again, you make money. You buy the H's here, you get stopped out, you buy again, you make money. You buy the H's here, you make money. You buy the H's here, you get stopped out. You buy again, you make money over here. What happens is, as long as something is in trend, and as long as we are following our methodology, buying back, we are just minting money because there's no change of regime. And basically you have 1 winner, 2 winner, 3 winner, 4 winner, 5 winner. It kind of translates to about $1,000 per 90 minutes of continuous transaction in scalping, right? Especially in Nasdaq, which is pretty easy to collect. So it's super interesting to think of it like all you need during the day is find that time, which unfortunately, had passed us now. Usually this time is kind of choppy, but we had a really, really nice long trend for 3 hours. That would have been very, very profitable to the tune of probably $800 to $1,200 worth of profit just on Nasdaq alone. Forget any other instrument. So it's really, really cool how you could see that time and money are very correlated as long as we have a continuity trade in terms of value. Chart values. Where do I go? 0007. Where do I go into chart values? Which if I go into properties, settings, what do I change? Not trading, right? Canvas? No. Scales. Which section do I change? Anything? All right. Status line. Where status line and status line, chart values. Oh, all right, cool. You're the man. Thank you. Thank you so much. Okay. Thank you very much. Okay, so that cleaned it up. So now we can look at this without the because I have everything blown up really big so you guys can see it. It just makes it a lot easier. All right, very tempting to kind of want to buy this at this support level over here, but we're going to be good, and we're going to wait till market opens up. Market opens up 9:28, about 75 seconds forward, 70 seconds forward. We have the market opening. Let me get myself organized over here on Nasdaq. Really have no. You know what? I'll buy the small one. I have like no business doing this, so I'll just buy this market on the small one. We'll play around on the small size, just because honestly, I don't have a trade here. I'm just fucking around. So if I'm gonna fuck around, I'll do it on small size. I'm trying to buy the support here, and if it doesn't work, I'll be happy to get larger, bigger. And we'll talk a lot about how many times you want to just go blindly buying versus giving yourself some reason to buy. It's another interesting thing that we talked about in coaching yesterday that I think came out of the conversation that's really, really valuable. So right now I'm just blindly buying the support. If this thing drops again, I'm going to blindly buy it again. One more time. Again, I'm doing micro contracts, guys. I'm just fucking around. This is not a setup for me. Okay, so I'm in here trying to see if I could resolve this thing. And it's 31. All right, great, wonderful. Is a perfect example of what I mean by blindly buying and getting it resolved. Nice clean trade for just FA money. not generated by any legitimate signal that I had here because it's pre-market. I shouldn't have been trading, but it's a technique that you can see working over and over again. And we're going to talk about the nuance of that technique, the trade-offs of that technique, and how you could give yourself the best possible chance of making sure that it doesn't bite you in the ass. Anyways, first trade of the day, Nasdaq worked nicely, even though it really wasn't a legit trade. We'll find it. S&P also underneath the market, trying to find a little bit of support. Markets are generally, positive bid, with the exception of, I think, gold is also positive, but gold is up at 76. Gold had a big rally. I haven't seen it. Whoa, gold is really having a nice rally. All right, let's take a look at gold. Gold is at 30. Okay, so we're in great shape. So this is, for those of you who are, inveterate counter trend junkies, here's the rules that are not in the PDF because they're really, we're only trading trend. Here's the off menu item rules that we want to do. So gold now is wide. It's 30 basis points wide. It's the moving average is really kind of really had a big rally, right, into the 76. By the way, 76, 77 was big resist yesterday. So keep that in mind. We're not going to do anything. We're not going to do anything until the indicator gives us a sign of divergence. What is that sign of divergence? We need to see a purple label that gives us an L, a lower low, which is not going to happen for a while. Okay, my typical, let me just run into the fire because I think it's fun way of trading is, let me just let me lay some out at 77s, 78s because we're definitely stretched out. That is not a good reason to trade. That's not a good reason to fade. We're going to watch, because this thing could easily go to 85 before it finally exhausts itself. We're going to let this move run. And only when we have an indication of divergence, are we going to start looking for fadeable trades, for trades against the trend. But here's the other thing that we're not going to do. We're not going to be doing trend trades in gold. Yes, this thing could go another $10 up in trend, but it is at a level that is so highly overstretched that if we basically buy the top, it's going to be very expensive for us to try to work out this trade because it could compress all the way down here before it finds any support, and that could be a very, very expensive proposition for us to try to resolve it, right? So one of the more interesting things, I talk about Mark Weinstein in that quote. I talked to you about how the best traders, we are far from the best traders, and certainly not nowhere near like he is. But the best traders should only, he uses this example of cheetah, right? Cheetah is the fastest animal in the world. He says the fastest animal in the world looks for the weakest, lamest prey. Okay, it knows it can outrun everybody, but it looks for the easiest prey to find. So we're going to do the same thing. We're not going to stick our head above water here until we get some easy prey conditions for us to start fading this. And also, the other thing is we're also not going to chase price because at this level, yes, there could potentially be more extension, but you're also super vulnerable to a big retrace, which could be very expensive. So again, stupid to come out. I don't care how much money this thing could make you in the next hour. The problem is there'll come a day where it will lose you everything because you bought the top and it just verticalized to the downside. That's how we want to be thinking about using the indicator in the most intelligent manner. Okay, let's take a look at where the equities are. Equities come up above the waterline. Nasdaq basically dicking around here. What do I mean by maxed width? Moving average, the space between the blue line and the red line, okay? The actual space divided by the notional value of the underlying. And how many points is this divided by the notional value of this underlying? And if it's 30 basis points, 1/3 of 1% or more, as you can see right now, the space is very tight. It's only 0.3 of 3 basis points, 3/100ths of 1%, right? It's a a value that's calculated for us dynamically on every single thing. Here, the moving averages are literally kissing each other. They are literally flat, 0.01 basis points. You see that? So there's no separation at all. We're looking, our money trades, the most easiest profitable trades is when the moving averages are just starting to separate and go in the direction of one direction or the other. That's when we have the easiest possibility to make money on trend. Okay. Once they really, really get wide from each other, there's a natural inclination for them to come back and meet each other, right? And the trend trade becomes a lot more dangerous. The reversal trade becomes interesting, but only if we have reason for reversals, right? Because it can trend continuously for how long. Patrick is asking, how and where can you trade S&P Mini with a small account? So, Patrick, let me actually put that question up here. It's a good question. So, right. So, answer to that question is twofold. You can trade a small account at if you're a U.S. customer, even if you're not a U.S. customer, at AMP Futures, which is a good futures broker. It's a broker of mine, and you can trade your own account there. I mean, as little as $1,000. They'll take it down. And you can trade micros with it. But the bigger question is, why would you want to? Why would you want to trade your own account when it's so much more less dangerous, so much more attractive, and fun to trade the prop account? For $50, $100. You could be trading $50,000, $100,000 prop account or $250,000 account like I am, trading it to target, getting it funded, and then trading it for payout. It's the exact same process, except none of it is your own money, except your entrance fee. So the answer in the modern age is prop it, as 0007 says. Exactly, prop it is the way to go. So that's my recommendation. Here's the discount to Apex. Be sure to take advantage of that. And also, everybody who buys the Apex today, I'll send you the PDF so you guys can have the rules. One of the things I forgot to tell you is that the PDF also has, I believe I made them. Let me see. Yeah, I made all the stops and targets in the PDF, so you're going to be able to get those in full format. Okay. So, because the guys in coaching wanted me to do that. So happy to send that to you once it gets going. All right, markets are kind of quiet. Gold compressing a little bit lower, but I got nothing here. I still don't have I was tempted to sell the 75s, and if I wasn't in front of you guys, I probably would have, because I take unnecessary risks. But the good practice is not to do that. The good practice is not to make the unilateral decision that this is going to be a good short, even though it's pretty obvious it was a good short. And just let the indicator give you an L. See, once we get an L over here, after we peaked at 30, the first L that we get, that gives us a semblance of confidence that we want to be then shorting any next rally we get. How's everybody doing today? You know what? Let's do my favorite thing to trade, because I haven't done that in a while. I'm actually curious. It was really interesting in London today. I was shocked, 45%, 55% MT4 to MT5. A lot of people still trading MT4. Okay. I love most. I'm going to give you symbols and you guys tell me. NQ, ES, GC. Those are future symbols. It's obviously Nasdaq, S&P, and gold. If you're trading CFDs, just choose the CFD variant of this. Tell me what you guys like trading. Gold has been money. I got to tell you, honestly, the I know everybody's saying gold is so choppy, and everybody's crying like a little bitch that it's been stopping people out. It's been stopping people out because if you're swing trading it, yes, you just getting whacked up and down. But if you're scalping, it's been money, money, money. I even last night, when I was trading with the guys in coaching, small scalps made money for me in gold. So yeah, it's a really, really clean trade. I actually find indices these days maddeningly boring because we're clearly slowing down. I mean, we got like about a week more of this, and then the party is really going to be over. Everybody's going to go away. Markets are going to be quiet. Christmas week, we're definitely going to take off because it's not even going to be worth it. I mean, unless all hell breaks loose, then we'll come back. But I don't think hopefully it'll be quiet. Arcos, absolutely, yes, it does. I thought I explained it visually. Maybe it wasn't clear, but yes, the width is the points between the two moving averages over the notional value of the underlying expressed in percentage terms. Okay, so it's normalized. Do you know what a basis point is? Does anybody not know what a basis point is? And if you don't, this is one of the most important things you need to learn. Does anybody know? Is there somebody who wants me to teach them what a basis point is? So if everybody knows the answer to that, then this is just very, very tight. It's 1.62 basis points wide right now. It's very, very tight, right? A basis point is 1/100th of 1%. Take 1% and divide it by 100, and that's 1 basis point. So like when the Federal Reserve talks about we're going to raise 25 basis points, it's 1/4%, right? So our threshold for when things get overstretched is 30 basis point, about 1/3%. At that point, we start, no, not willing to trade this. I'm trying to see if I want to get into this trade. This is it's not even worth it. Fuck it. It's just, I wanted to see if I want to short the S&P at these levels, but it's so tight and it can verticalize against me so much that it's just, I don't even know if it's worth it. I'm not even going to bother. Okay. On the Nasdaq side, it actually is kind of interesting. So Nasdaq now, I'm actually looking for an L label, a lower low label. If I get a rally that gives me an L, I want to be short Nasdaq. So far, I don't have anything going on here. Oh, and let's just flip over to gold for a second. Gold's still not giving me an H, give me an L. So we'll go back to Nasdaq. All right, so Gina, Patrick, you guys familiar now with the basis point? Now you're going to be very, very smart. Oh, sorry. Sell market. All right, we're going to be short this market. If this thing goes against us, we'll get larger as it goes higher. Let's see if we can. So this is a 2L shape. This is a retrace trade, right? We're trading this with a 10-point target, 10-point stop, which is 40 ticks up and down. Okay. Sell market. We're gonna get a little bit shorter again. See if we can get this. And we're gonna give it one more time, and then after that, we're gonna get a little bit more careful with our trades. I'll try to sell it at this resist level if I get it. We'll see how much more push they're going to get on the NAS. This is typical. I hate these trades at the beginning of the day because we're always going to get that dip that comes back down to a V-shaped recovery. And I'm always eating the V-shaped recovery, but I wanted to run this technique with you guys. And I don't have much, I don't have much time today to like wait until the 10, 11 o'clock hour to trade this technique better. So I'm I'm going to be trading this technique at probably a disadvantage, but let's give it a shot. Let's see what's working. And I'm going to try to explain to you what I'm trying to do here in terms of activity. Gina says she's smarter now. Good for you. See, this is what I'm here for. Okay, 10, 16. When it gets up to about 30 ticks, let's see if I can get 30 ticks out of this thing. Maybe not. We'll see. Oh, we had news. You know what? You're right. D, I'm so bad. I still am like not in that good frame of mind of going into the calendar. D is saying we had news. We have factory orders. That's nothing. We have ISM today at 10. That's a big event. I should be a lot more careful today, but I just don't have much time to trade with you guys today. We had the global PMIs. Actual was 54.9, a little bit better, a little bit stronger. So that had some. Maybe that was the pop on the news here off the PMIs. I definitely probably should not have traded the news, but let's see if I can work my way out of this whole thing. Yeah, you guys are right. You guys got to remind me to print the news here. Okay. All right, I'm going to do one more sell market at the 2150, right? We'll see if this thing comes in a little bit. If it doesn't, if it races, takes me out, then we're going to get a little bit more. We're going to give ourselves a little bit more space in terms of trading the P&L. We're clearly like in a V-shaped recovery off the early morning sell-off. So, I could get my face ripped off here very badly, but it's fine. I want to show you the technique. I did two things this morning. I'm trying to explain to you. This is a big problem of mine, is that I get into the nitty gritty of the strategy, and I forget the actual news background against which we're trading, which is a big mistake. I should have waited till 45. Should have looked at the calendar. Tomorrow I'll look at the calendar, and the calendar will be nothing. So there we go. Okay, let me get myself organized here into size. Yeah, we have another big event coming up at 10, and it's 9:49, so it's 10 minutes. It's really, I'm really squeezing myself in front of news here pretty badly. I'm going to give it one more shot. And then we'll talk a little bit about techniques and trade-offs, depending on how this thing goes. Okay, one more time. One more time at the 32s. This takes me back. No, where am I at? 30, 25. I'm still climbing. After that, I have to stop now and reconfigure myself. Now, after this, if we can't resolve this right now, we're gonna have to look for a red candle. We're gonna have to let the market tell us that it's starting to top out. All right, we're gonna take this trade, and we took it all back essentially at a scratch because I got myself too deeply involved. But let me, while we have time, we got 9 minutes before the news, so I'm not going to trade in front of the news. Let me explain to you kind of the techniques that I was trying to do here, and what should be working, where the trade-offs are, and where it works and where it doesn't work. First of all, let's talk about the fact that this is the shittiest time to do what I'm doing. The first 15 minutes of the market usually do not create any kind of continuity one way or the other way. They create these V-shaped recoveries, which are very, very toxic to our trading. Because the way we're working is we're looking for the trade to race up, and if it gets a little higher, we get stopped out, we go a little bit higher, it gets a little bit higher, we look for it to break to the downside. But if we're looking at a V-shaped recovery, it can just go 1, 2, 3, 4 against us in a very, very ugly fashion, right? So that's also, that's kind of stupid. Secondly, there's news on the tape today, which I totally forgot about. That's really also very stupid to trade the first half hour because of the news of the tape. But we wanted to get, me, I love to trade with you guys instead of just talk with you guys. So I forced a trade. So those two things are bad. Now, the aspect of technique, right? You have the signal, you take the trade, right? And in a normative environment, right? If you get stopped out on the move, you cannot wait for the red candle to occur. The reason why is because if you wait to sell over here, like I actually came close to resolving this trade. I got stopped out, but this trade just didn't retrace enough for me. I think I got stopped out at 14, and I needed 4, and it came down to like 8. Had it come down to 4, I would have totally resolved this trade to the downside. But if you wait for the price to come down and give you a signal, you're already too late. The profit usually is in the retrace. That's the whole point of the retrace trade, is you go higher, higher, higher. The problem with that is that you're eventually going to run out of trades. You're gonna hit that maximum limit. Right now, I'm trading $250,000 accounts, so I'm starting with one lot. Obviously, I have a lot of margin, but even in about 5 or 6, basically after about 5 or 6 attempts, I ran out of all my possibilities. So I came here at 4 attempts. That was way too close for comfort in terms of resolving it, and unnecessary today because of the news. But the general rule of thumb is you give yourself 3 tries blindly, meaning you get stopped out, you go higher. You get stopped out, you go higher. Get stopped out, you go higher. Same thing, obviously, on the downside. You get stopped out, you buy, looking for a bounce, looking for a retrace. After that, you need to be looking for a sign of a topping. And a sign of topping is when you get the first or the second red candle. Now, at that point, if you've had a big move, the red candle is going to be more meaningful. Like right now, we have a pause. None of this is kind of meaningful right now because we have the news coming up in front of us, which could completely, push us higher in terms of movement. But the point being is that on a normal non-news driven type of situation, you will eventually hit that exhaust point, and only then do you hit at the level 4, level 5, do you trade the reds, because then you have to you can't sell it blindly at that point. Yeah, ISM services coming up at in 5 minutes. Here's the ISM services numbers. I finally put. I was trying to be a good boy and put the calendar on there now. Anyways, that was not pretty, but he got the job done, right? I mean, we got the trade done, and I got out of the trade more or less alive, which is all that you really need to do. Let me reset. The other important point is once you're done with the trade cycle, make sure you reset all your levels back to its original one level large. All right, what time is it? Is it now? It is. We got 3 more minutes. ISM services is ISM PMI. Market is looking $56. Michael's looking 55.5, right? Is that right? Let's see what the numbers are. A previous forecast. It's not final, it's forecast. Sorry, 55.7. So market is looking for a tiny bit of weakness on the ISM services. I don't think it's going to be much of a market mover, but let's see what it does before we jump back into the trade. Two more minutes left. We don't have anything on the board right now because we're waiting for the news to come out. By the way, we're trading PMIs live. The 0007 says he's smarter now by 1 basis point than 1%. Very nice. Very nice. Very nice. And look, here's what I was going to say to you. So you see how in the proper methodology, you would have waited for this red candle. You would have shorted the 30 at that point. Like this is the level 3, level 4, and now you see the whole thing is unwinding. Now you can say, oh, why didn't you just wait for the red candle beforehand? Well, because you don't know how the path will work. Sometimes the path will resolve itself in the first couple of minutes. Sometimes it takes a little while. So that's why you have to have this mix of methodologies. You kind of go blindly for the first 3, and then you wait. If you're wrong on all those blinds, because typically those blinds work. If you're wrong on all those blind entries, then you wait for a candle entry, like over here, and now you see the whole thing unwinding nice and neatly, and you would have taken everything back as intended. So you guys get to see that in real time. I'm just trying to explain that technique to you. Where am I? What time is it? 30 seconds. 30 seconds to talk to news. I wonder if this thing. I've never done the calendar off the side. Let's see if it's actually going to print the value, or we're going to have to go to Financial Juice. Curious. It'd be good if it does, because that's a really nice little feature in TradingView. Oh, look at that. What is it doing? Look at that. Prices to, shitty print. Whoa, look at that. Wow, that's pretty good. I like this, huh? What do you guys think? What's a weak number? Um, New orders down, employment down, prices up. Fuck, this is like a nightmare for the Fed. Prices up, demand down. So all of this is kind of pretty ugly. Services component is the best predictor of employment in the NFPs. So NFPs could be a little bit weaker, but honestly, it's still above 50. 50 is the boom bust line. So it's not like services, it's not like employment is really dying, but clearly a negative print on the news and takes everything down. So we'll see. Now we can close this out. We can go to the see what the S&P is doing. See, the S&P is definitely feeling the heat, feeling the heat on this, right? So if I wanted to just do a little bit of a putz around trade, I'm going to see if I can. Just trying to get out at the 80s. I don't think I'm going to get into the 80s. Maybe I'll get out 79s. See if I can get in the 79s. I can't even get 79s. Let's see. All right. Short 79s. Let's just see if we can scalp this a little bit. If this goes back up, I'm perfectly okay selling against this because this is, I think it's going to weigh a little bit on the market here. Whatever knee jerk move we have here, I think will pull us down. So, and I like trading the S&P because the S&P is the most economically sensitive one. Oh, sorry, guys. All right. I'm short again. Short again on this at around 80, 50. I should have gotten a little bit higher. All right, it's fine. We'll give a shot, see if this thing corrects back down to where I need it to go. And we resolved that trade for a nice positive trade again. So again, now you see, I mean, I didn't take the full 8 ticks, I took 7 ticks, but you see the idea of needing to go blind, right? Because you snooze, you lose. It pops up, right? Stops you out. And if you sit there, wait for confirmation, you're pretty much going to be selling the bottom of this thing, right? Now, yeah, maybe it'll come back down, but this was a much faster. It took me only 2 trades to resolve that trade. Super quick. I was very confident that it was going to, at very minimum, do a double bottom retest on this thing. It's not even clear to me that we don't have a negative trend off of this thing once the news kind of disseminates through the market. It's pretty crappy news, I got to tell you. Not horrendous, not like we're in recession type of news, but basically we're in serious slowdown. It was pretty obvious that we're in serious slowdown. So. The positive side on this is that it's going to put the pressure on the Fed not to, the negative part of this is that if price is still going up, so it puts the pressure on the Fed to stay still. But then the slowdown, Trump's going to come in. He's just going to be all over Powell to want to lower rates. So we'll see. But I think, anybody, I'm just actually curious. Let's take a look at what the poll results are here. Fully 50% of you love the Nasdaq, and then it's just 25-25 on the S&P and gold. That's interesting. That's good to know. That's really, really good to know. Okay, so let's go back to Nasdaq. So Nas, by the way, kind of shrugged off this thing completely. Looks like it wants to go higher. Let's watch it, because now is kind of a moment of do or die. If it holds the bid, it starts to rebuild itself, to the upside. Takes 44.50, 44.60. Then it could be a much more positive tone for the S&P, for the Nasdaq. But for now, it's just consolidating around the moving averages, so we don't have any kind of trend. Back to our friends. Look at this. Sorry, we missed our friends at gold, right? Because we were focused on the things. Remember, I told you that when we get the weakness on the L shape, then we wanted to short this thing at the 75s. That would have been a great short. Now we kind of right back to, where are we? 23, 24 wide. We're kind of wide. Now the trade, honestly, is as a double top formation in gold. Now I have to be really patient. I mean, if this thing drops, it drops. I have to let it go. But I really can't short this thing until it gets up to around the 76s. So I had the plan in gold, but I got sidetracked with Nasdaq and the S&P. That happens a lot. I show that's why the whole point of live is for me to show you all the techniques, and you guys can take them yourself and then use them to the best of the ability. I don't have an expectation, Jay. Like, my expectation, as I said to you, the next 1 minute forward. I don't forecast the weather. I just trade it. I don't have I've been bearish for like last 6 months on the market, and I've been wrong as a tack. So the best thing I do is I never trade my own opinion. I like the 1-to-1 risk-reward ratio on a 1 minute chart. Yes, the reason I use the 1-to-1 risk-reward ratio is because that's sort of like the minimum tolerable thing that you can do, and get away with it. Once you start doing 1-to-2, 1-to-3, the stop outs are very, 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 very painful. Takes a long time to get back, and it doesn't necessarily pay you. And it's almost, and if you're going the other way, trying to do 2-to-1 on a 1 minute chart, you very rarely get those because the market just isn't going to. The market is very much a two-way trade on a 1 minute chart. So 1-to-1 is the sweet spot that seems to work pretty well. All right, Nas is positive bid now, meaning that the 8 is above the 200. So now in the Nas, and now I'm looking at the chart, like sort of from a longer point of view. I got a higher low. If this thing starts coming down, like if I get a purple label, a label that's going to come into the moving average chart, it's going to take probably a couple more candles. I definitely want to be a buyer on Nas. Even if it starts to come in back down to the 400 level, I still want to be a buyer because I think this is going to resolve itself positively. I'm like in no man's land on gold. I just kind of annoyed at myself that I should have. This would have been a great short here, and I just simply it was news too, right? So it always looks good in retrospect, right? All right, I'm going to do something fun with you guys. Let's see if I can do this. No. Won't even let me buy the bid here. Look at that. I knew it was going to pop. Okay, forget this. one of the it's so fucking obvious. Sorry, guys. The really hard part is when I'm trading live with you guys is to explain and do at the same time because I can't chew. Like this was a very, very clear trade to me that I love to do, which is doesn't have a label, doesn't have a pure signal, but you've broken up above the moving averages. You have a little bit of a retrace move here. You buy the reds. It's almost always, look at this move. It almost, really, really gives you a nice hot pop to the upside. All right. So unfortunately we couldn't get that because I was trying to explain it to you. We have to be a lot more patient now for the retrace to work. The S&P also popped a little bit higher here on looks like a little bit of news. I wonder what the news was. Let's see. Do we have anything? No, nothing much. So that's a big miss. It's a 3-point miss on the ISM. That's pretty big. No trades, guys. I'm sorry. No entries. So NAS is definitely a positive bid. Here, our only danger is it starts to really, really verticalize. The moving averages start to get much wider, and then we don't get a chance to kind of trade this. All right, I'm gonna see if I can get into this. I'm not getting into any of these trades. Let's see if I can get into this trade. I'm buying them high, getting myself into a really, really bad fill. I should be buying them below the moving average. I'm buying them above just to kind of, get into the trade. And if it's very likely going to stop me out, and I'm going to have to come back again and buy below the moving average. So again, I'm making a probative trade because I'm forcing it right now. See, here's the label. This is where I should be buying. I should be buying when this thing drops all the way down. But you don't always get that chance, and I'm just trying to take the trade as I can. If this gets up to about 20 ticks, I'm going to take it. 11, 12. Come on. So philosophically, what I'm trying to do is trade with trend on a retrace. Practically, I'm doing a very poor job of it, but you get the idea. The point is to show you the concept, and then you yourselves can do it much better than I do, as many of you do. Come on. Jesus Christ. No, I'm not getting it. It's gonna stuff me out. I should have taken that plus 15, but I got a little greedy. I'm gonna eat this trade probably, and we'll have to come back and see if we can buy it deeper here. All right. Coming in on level 2, it's probably going to come back a little bit even lower against me, but we'll see. I'm going to reconfigure myself to 4. I have the targets over here all set up. So if it pops, it pops. If it drops, I'm ready for it. Okay. Oh, what happened here? Am I in? I'm in at 8. Okay, I'm in at 8. Okay. So again, I'm spending too many trades on this thing. I'm going to give myself one more shot over here, and then after that, I'll have to get a lot more careful with my entries. But I knew I was in too high at these entries on the retrace. The trade was over here. I forced the trades. Again, I suck at execution today because I'm all over the place. But it's the philosophy that matters that I want to show you. Execution can always be corrected, but it's the philosophy that really, really helps you stay in the long run. Okay. I gotta get my glasses on. Fuck. Okay. That got resolved. Boom, boom, boom. Took a little while. Sorry, guys. Like my new methodology now, I just realized this. I'm going to ignore all your questions while I'm in the middle of trades because the problem is if I take my eye off the ball. But one of the things you see about scalping is you don't focus. This stands for BFF stands for be fucking focused. So, I am unfocused. And when I'm unfocused, obviously I make errors. When I get focused, I win the trades. So this trade was a nice winner as it finally resolved. But just forgive me for ignoring all your questions until I'm done with the trade. I got to start watching trades because if I don't watch for my trades, I can't react to them finally. Is a number without H&L a change in trend? Yeah, it is. The point is, so Jay, once you're committed, without the H&L, yeah. So this was a bullshit. I shouldn't have been in this whole cycle. But once you're in the cycle, you got to stay committed. Like once in for pound, in for penny, in for pound. Is that the expression? Because if you're not committed, if you start fucking around like, maybe I don't want to do this anymore, maybe I don't want to do that, then you lose the opportunity to resolve the trade. Okay. The key thing is you got to be committed. You got to stick to the structure of how you're going to do it. And as long as you're entering at a relative value. So in this case, I was buying very, very tight moving averages. It was, I knew it was probably going to find. So see how it found support at the 200 SMA. It's just that I started my cycle here. I should have started my cycle here. This should have been the entry. But as I said, I had bad executions that got rescued by my philosophy, which is the most important thing. As I said, executions are the least important part. They're very important. Don't get me wrong. They're very, very important. But they're the least important part of long-term success. It's the philosophy that's the most important part of learning success. You got to stick to that. So 007 says he took the trade. made the winner. Good for you, my friend. You probably had like 2 levels versus my like 4 levels of bullshit. But the key thing is you guys see exactly what I'm doing, right? Da 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 over and over again. This was nice because like now we know Nasdaq was a scratch, S&P was a win, this was a win, so it's like 2 wins and a scratch. And I should have been trading gold, but I'm not paying attention to gold. Gold not giving us anything right now as a trade. Gold's just been really, really flat in the 76s. So we will leave gold alone. Right over here. Here's NAS coming back up. So remember I told you the other reason why I kind of liked NASDAQ was because it had a higher low here. I was like, if it's going to come back in, it's going to be a good trade. Of course, trading the retrace, the true retrace, instead of like, the FOMO. This was a FOMO retrace, right? And then I even took a FOMO, a much higher retrace over here as my first entry. Those was stupid. The real great retrace was underneath here in the moving average. But it always looks easy in retrospect. It's much harder in real life. That's why we trade live with you. So you get to see the good, the bad, and the ugly. Do you guys like the circle better than the square? Does anybody have any preference on the broadcast window? Oh, Jesus Christ. I bought this cup of coffee. Literally half this cup of coffee is on my clothes, just fully absorbed. I don't think I took a sip without spilling one on myself all day long today. Circle is great. Oh, thank you. So now we're starting to, even out. And the other thing is you can really see on the 1-minute chart how trends start to take place. And John says, I'm a beast. I'm more like a slob than I'm a beast, but, I'll take it. Thanks, John. What I was going to say is, you see how now the pattern is starting to develop. Now, in the best of possible worlds, I don't know, but nothing I would love more than this is like 10 o'clock, that we have an hour and a half. We have like a 70 to 90 minute rally. Because if we have that, then every H label is going to be an interesting possibility to make money, right, in NASDAQ. It's going to give us that chance to trade this out. If we don't have that, it's going to be chop, and we're just going to be, trying to struggle in hand-to-hand combat with the market. But, let's see how it plays out. Now, the S&P is just not, the S&P is actually dying. The S&P, look at this. So again, we were busy with NASDAQ, but S&P is actually negative bid. The red is above the blue, or the blue is below the red, which means it's negative trend. And the S&P now, if it sends us another, like this was a great short label. We could have sold the 78, 75s. It would have almost come in for 8 tick. You see, everything is very tight. It's probably about a 6 tick trade here. But let's see if they're going to start develop trends one way or the other in the markets. It's unusual and noteworthy that NAS is positive bid and S&P is negative bid. That means there's a lot of asynchronicity in the markets. One of the interesting things about this, I think, is S&P is the real economy. It's reflecting the weakness in ISM services, whereas NASDAQ is technology. And it's sort of showing, well, it got weaker, but didn't really go negative. So that means there's still going to be demand for technology. Maybe that's why the NAS is trading a little bit better. I mean, NAS 78 basis points to the upside. That's not a small move. Gold. Let's go look at gold. Gold is looking at H's. Gold is about 25 wide. So we're now in that zone where I am interested. The only problem is I have to actually watch gold for a while. But I'm looking for possibilities to fade gold. So maybe gold stretches itself out to 78s, 79s. Certainly at 2680, I want to be all over that thing on the short side because I'm very confident that at those levels we're going to get a little bit of a correction, and that's going to be like well above the 30 basis point width. Karen says circle is nice, but mainly listening. Yeah, you're listening to me rant and rave. That's funny. 007 says, don't be a blockhead. Chippy says he wants a square back. No, Chippy. It's a circle of love, my friend. All right, so look at this. Gold breaking out. Gold actually, so this is one of those trades that is tough to do. And I'll explain to you why. So you're looking at gold, right, on the chart here. And it's like in that no man's land. It's above 20 basis points wide. It's kind of like it's high enough where it's not overbought, but it's so high that the risks become a little bit more problematic. Still, if you were bullish, you certainly could have taken all these H trades. You could have taken this 13H, to the buy side, it would have worked. You could have taken this 14H to the buy side. Now we're starting to really expand. Now it's starting to get up to like the 28, 30 basis point wide. And and now look at this. It's definitely trading at the 79.6. You know what? Fuck it. Let's do it. I know I'm going to break all my rules, but let's have fun. Let's go see if we can lay out the 80s. I'm going to lay out the 80s over here. And while I was dicking around, it kind of did it. But it's fine. If it comes back into the 80s, I'm happy to initiate my cycle at that level because I don't think it's going to go much beyond that. Maybe it'll take me another cycle to redo this. I doubt it's going to pop its way back up there, but maybe it'll give us that opportunity. So what I'm doing right now is the exact opposite of trading with trend. I'm trying to pick tops and bottoms, but I'm picking them at the regions of the chart. I'm trying to find that that weak little lamb, the injured lamb in the herd to kill by doing it very, very far up on the chart by trading the round number, which always attracts a lot of stops and targets, and therefore provides a natural flow of retrace. And because even on the shorter term moving averages, the prices are really levitating above the shorter term moving average. So when price really, really is far away from the short term moving average, that's a good sign that you have a reasonable chance for a fade trade. Just watching. Just want to watch the other charts for a second. Yeah, it's already corrected. All right. In the meantime, interesting. All right, we'll kill this because it doesn't really matter. Oh, let's see. Give it just a little bit more time. I was going to say the interesting part here is we're looking at the Nasdaq is now starting to develop a trend, right? So now I get an H label in Nasdaq. I do want to be in this trade. I do want to be there. Nasdaq is leading to the upside right now. All right, I'm going to get rid of this sell limit. We'll just so that it doesn't dangle over there, and we'll leave gold as is. Crude oil change. Crude oil. Yeah, we don't really look at crude oil. We don't trade it. It's just not that we don't want to, but just we don't have the capacity to do this. Then we have the 17 bill auction. There's gasoline stocks. 10:30. They already printed. Nothing much going on here. There's a lot more gasoline than they thought, right? So that's also a sign of a slowdown. Oh, there's gold. There's gold coming up to the. Just watching gold here. Oh, you know what? Let's not fuck around. Let's. I have the 3H in Nasdaq. Let's organize ourselves. Oh no, 3L. Oh! Look at that. So no trade here because that's a lower low. Did not give me permission to take it. So I'm just gonna have to ignore this. Let's go back to gold, which is always a lot more fun for me to do. So gold is at 80, trying to push a little higher. I'm gonna try and get it, lay myself out around 80.2. Let's see if let's see if it sweeps me up. This is basically just me fooling around doing my old market making stuff. 70.9. The 80.2 is at the highs. So it took out the highs, which is fine, and may run through me again, but then I'm fine because I'm only at just the first sequence of my trades. And if it doesn't run through me, I'm just going to try and take about 9, 10 ticks back, 7 ticks back here. We'll see. We'll see if this is a super strong push higher. I get a little bit of a corrective mode here. Is that 80.2? Let's see. I will push this a little higher. Correct ourselves, 79.1. Goes higher. Okay. So why am I trading this trade? 80 is a round number that attracts a lot of flow. They like to run the stops and try to take it back. We're still levitating above the moving average, which is around 78. If they really, really want to run it, the next level of resistance is going to be like around 84, 85, which is only 1 or 2 levels of resolution for me. And I take it 9 ticks. And we make the final trade of the day here. And we put ourselves into nice, clean P&L for the day. Not my trend trade, but the trade I love to do. And again, using sort of Mark Weinstein's idea, if you're going to do something stupid, you better be sure that you're doing it right? So if you're going to short a trend, you better be doing it at highest possible levels where you got lots of stuff on the charts and where you have a reasonable chance of resolving it. So, hey, Dr. D says 2 positive trades on the ES chase. Oh, the ES kind of popped positive too. Yeah, this actually positive. So this was a 3H trade, and if you're a momentum trader, this would have been a good trade for you to go higher. So you would have been totally fine. Oh, look at the NAS. NAS totally blew up. I didn't take this trade because it didn't give me the proper signal, but the NAS still would have worked too. So whether you traded the S&P, you traded Nasdaq, you traded gold, all those directional trades would have worked one way or the other for you. So I will leave you with that. All right. After a few challenging starts today, we managed to really do okay. Hope you guys had a good time. Everybody make sure that you get Apex. As I said to you, if you want to join us, I'll be happy to give you the PDF of all the rules so you can have that. And of course, by joining us, you get the actual indicator, without which it's really not much use to do, to work. Oh, hold on a second. I did not give you the link. Here's the link. Without the indicator, it's not much use because this is really the good guidepost for where you want to be. Okay, everybody good? We had a fun time today. Thank you for hanging out with me. Slow, definitely slow winter season, but we'll still make money. This is what I mean about it doesn't matter how slow the markets are, doesn't matter how choppy we are. As long as we generally stick to our rules and do a good job, we can work our way out of it. All right, guys. Thank you again. Thanks so much. Everybody have a wonderful, wonderful day. Another good green day for us and green day for a lot of people in the room. Thank you, guys. I'll see you later. Bye-bye.